Good day and welcome to the PSG Wealth Offshore Solution. This is for the month of March 2023. My name is Siavuya Monakali and a fund analyst within PSG Wealth. We'll start off by looking at the market background. And the theme that we see for the month is that it's actually been positive across the globe, both in developed markets as well as emerging markets, where developed markets returned 3.09%, whilst emerging markets were 3.03%. Across the regions globally, we see the US as well as EU and Hong Kong really leading the pack, together with Japan equities returning above 3% returns, whilst the UK market detracted 2.47%. Whilst looking at the asset class of global bonds as well as cash, what we then see is that it was also a positive month for global bonds, both global sovereign as well as global investment grade universe bonds. Emerging market dollar denominated bonds also returned a positive 1.03%, whilst cash lagged. It was also positive for the month. And looking at global property through the S&P Global Property Total Return Fund, that detracted 2.84%. Looking at our solution, how have we actually fared for the month of March? What we then see is that the 91 investment or global investment fund led within the preserver, both dollar and pound funds. Similarly, we see the 91 global strategy leading within the global moderate fund of fund, whilst within the global flexible fund of fund, both dollar as well as pound, we see that the 91 global macro allocation also leading the pack there, with Fundsmith in the PSG Wealth Global Creator Fund of Fund leading the pack. Whilst from a bottom performer perspective, amongst our underlyings, we see BlackRock, Fidelity, MFS, Saracen, as well as Capital Group and Dodge & Cox within the underlyings that they existing within their portfolios, they seem to have lagged. And what seems to be positive is 5 out of the 6 funds within the global moderate fund of fund ended the month above their bench. Similarly, 6 out of 7 within the global flexible fund of fund, whilst in the pound fund we see 4 out of the 7, whilst within the global creator fund of fund we see 7 out of the 10, whilst within the preserver space, that's where we saw a little bit of challenge from our underlying for the month, with only 1 within the dollar fund out of the 5 managing to be above the sector, whilst none within the pound fund. Though that may be the case, we see from a quantitative and qualitative radar screen perspective, none of our underlying funds have actually fallen into the quantitative radar screen. And just specifically zooming into specific funds, just looking at the return over the month, the minimum investment holding period, as well as since inception, what has been the return that clients had been able to receive. And then at the bottom, then the table will show you that when we compare against other portfolios within the similar category, how have we actually fared compared to them. And what would be notable is over the holding period, as well as since inception, the funds have managed to comfortably provide a positive excess return. Whilst looking at a comparison against our peers, we see that over the recommended minimum investment period, both funds, dollar and pound, returned in the first quartile, whilst you then see further strong history of consistency being either in the first or second quartile. Whilst in the global moderate, what we also get to look at is the holding period, and since inception, the fund has been able to provide positive excess return to our financial advisors. And just looking at the bottom table, we see that the fund has been ranked within the second quartile for most of the investment periods. Whilst looking at the global flexible fund of fund, that we see also similarly a trend that the fund compared to the peers for any period above 5 years above 5 years, including 5 years. Both solutions have been ranked within the first quartile, with the pound fund ranked first and the dollar fund ranked second since inception. Whilst if you look at 1 month holding period and since inception, these portfolios have been strong and consistent within the market, and they've managed to provide positive returns to positive excess returns to our investors. Last but not least, we look at the global creator. Though it faced a little bit of a challenge within the short-term period, where we see the fund appearing within the third as well as fourth quartile, nevertheless, the consistency within the portfolio seems to be quite strong when you look at periods greater than 4 years, where it is ranked in the first quartile, and since inception being ranked 155th out of 1,900 plus funds within the sector. Just summarizing now by looking at how our solutions appear when you compare them with other funds with similar mandates and within similar categories. What you see as a strong trend is that over longer investment periods, you actually do see our portfolios continuing to provide value to our clients, and as a result, allowing our clients to be able to achieve their investment goals. As you could note from the table, that for any period within the preserver space, any period greater than 6 months, the portfolio do provide either first or second quartile, with the pound fund predominantly in the first quartile, whilst the moderate also improving, having a lot more time within the second quartile there, and a few challenges in the short term, whilst the flexible, both dollar and pound, including the global creator fund of fund, having a strong record there, with any period greater than 4 being ranked within the first quartile. Thank you.